Vamos a empezar un viaje y además va a ser un viaje en inglés. Es un viaje hacia la adolescencia, desde la adolescencia, para ver cómo este mercado, con todo su potencial, va a seguir creciendo. Por eso le doy ya la bienvenida a Daniel Knapp. Welcome, the floor is yours. While you take your seat, acordaros de los 5 minutos de después, para si alguien tiene una pregunta, lo suyo es que la hiciéramos en inglés. Y si no, os echamos una mano entre nosotros dos. Okay, the time is yours.
Wonderful. Thank you very much for having me, and a very, very good morning. My name is Daniel Knapp. I'm the Chief Economist at IAB Europe. So my job is to really understand the trends that are shaping the future of digital advertising globally, and in particular in Europe. So I crunch a lot of numbers, macroeconomic numbers. I go through the company reports of all the companies in our sector to try to understand what's really happening. And of course, one of the big themes, as you all know, has been retail media of late. But there's a lot of hype, a lot of talk, and surprisingly, fairly little data. So in this presentation today, how's retail media going to shape up in 2024 and beyond? I want to chart this journey into adolescence of a very nascent digital media format that is maturing quite quickly and growing quite quickly. But the story isn't straightforward. We've got different actors, advertisers in there, agencies, retailers who are trying to become media owners and more. It's not that easy. We have complete changes in the way data works in digital advertising, and so forth, and so forth. So it's not going to be a linear growth story from where we are right now to a perfectly envisioned future, but there's huge potential. And we'll show you today some of the things that are structuring this market and what we need to do together as an industry to completely unleash the potential of retail media. Let's start with a little step back. I want to talk about Maple Bear, what is that? Signal loss, and the end of the CMO, to set things up a little bit. Maple Bear. Recently, a company called Maple Bear filed its S1 statement signaling its intention to IPO on the stock market. And that, for me, was a rich opportunity to analyze this transcript and see, well, is it an advertising or is it a commerce company? Who of you knows what Maple Bear is? What company that is? Anyone has heard that company before? It's the name of Instacart. We all know Instacart in the US, the big last-mile delivery platform marketplace, and they did their IPO. And Instacart is a commerce platform. You can buy stuff on there, it gets delivered to you. They work with grocers and other retailers, etc. However, when you count the number of mentions in their S1 statement, how often they talk about commerce versus advertising, advertise ads, you see a clear trend. They're really over-indexing on talking about advertising. It makes sense, because advertising already is 29% of the revenue of this commerce company at $740 million US. And it's highly profitable. So advertising for this company, closed-loop measurement, as Salvatore mentioned, etc., actually fuels the entire commerce business. I'm mentioning this because it really demonstrates a key truth about retail media. New companies coming into the space of digital advertising that have not been there before. Whether they're publishers, whether they're other players, all coming into this space. And you can clearly see this. Instacart is here. We can zoom out a little bit here. For a long time, the major growth in digital advertising came from what some call the duopoly, right? Alphabet, Meta, then Amazon came on there. But we can see, interestingly, on the top digital sellers of advertising, pure play digital sellers of advertising in the Western world, excluding China. New players in that weren't there 2 years ago. Instacart, Walmart, Target, they are rapidly growing and turning into multi-billion-dollar or euro businesses. And that's, of course, exacerbated by a complete change how the internet looks like. We all know the cookies are going away, the third-party cookies, and this interoperable open internet that we often use to transact media is actually turning into a splinternet, an internet of fragmented walls and hedges that often all have their own data that is not shared across these little hedges or gardens and not really interoperable. Clearly, you have the Google internet, the Apple internet, the Facebook internet, the Amazon internet. even the open internet, so what usually news publishers have, is increasingly fragmenting with different targeting paradigms, from topics to first-party data to contextual data, etc. And then you've got new, I call them challenger gardens, intentionally not walled gardens, because some are more open than others, and retail media plays a crucial role in here. What you can see is that retail media actually overlaps here with some other gardens. So we have, of course, the retailers, places like Instacart in the US, for instance, but here Carrefour, Corte Inglés, and others, in a sense, building their own media and data propositions and keeping that data fairly inside their own systems. But increasingly, we see partnerships with other walled gardens, with connected television in the UK, etc., to kind of fuel and power the web. I think this is quite interesting to see, because it shows that the data is not only used for the retailers, but increasingly retail media, in a sense, becomes part of an infrastructure, a transaction, a data infrastructure that powers other media growth in this fragmented world. And those who can thrive in this world of fragmentation, of the split internet, are those that have rich first-party data and that can attribute sales to their advertising campaigns. So all those players here that have these gardens are going to benefit in this world. But we all know that data has pros and cons. There isn't really one alternative, one single alternative to rule them all when it comes to the end of third-party cookies. We've got a vast array of different technologies trying to solve targeting, measurement, attribution, and so forth. And a lot of pros and cons, right? Some are more accurate and more persistent, i.e. you can identify the real user, the data can be tracked over a long time, you see first-party data in there, login alliances from publishers, and so forth. But then when you want to say, I want to have full reach, I want to have real scale, suddenly the data becomes less granular, less identifiable, and it goes more into geography, context, cohorts, AI-based models, and so forth. So a key for the future is to combine these things. But again, those who start out over here, players, like retailers, with their credit card data, loyalty schemes, transaction data, are very well positioned to take a very strong perspective in this new market where everybody is competing for identifiability and reach. When we look at investment trends, we can see something interesting. We can see that despite the macroeconomic environment and despite the concern about the future of targeting, investment in advertising is continuing. We all know we're facing macroeconomic headwinds, in particular in Europe. Some call this the poly crisis. We have war, we have macroeconomic uncertainty, high fuel prices, high consumer prices overall, etc. But the good news is, if you look at the past kind of full-year statements of some of the largest advertisers in the world, consumer packaged good companies, we can see their revenue overall was growing. And when their revenue overall is growing, they typically also increase their marketing expenditure, because for those companies, marketing expenditure is a share of the sales revenue, and i.e. therefore, if sales grow, marketing grows. And they all have a positive outlook for 2023 to invest more in advertising, and in particular in digital, leaning into those new data solutions. So despite these macroeconomic headwinds, paired with the structural challenges, there's actually a further push into digital. But things are changing how digital advertising operates and how these CPG advertisers think about advertising. For instance, recently, Unilever ditched the role of the CMO. The key core pillar of all marketing activity suddenly was not a role anymore. Instead, they had a chief digital and commerce officer, quite different. I think about retail and media, digital and commerce. So increasingly, these retailers or these advertisers realize that we need to do advertising different. It can't just be about clicks, views, likes, or media metrics. It needs to be something else. And indeed, when they said, why are we doing this? They said, it's not because we are backtracking on the notion of marketing. We really want to add the component of sales into that role, to finally bridge the world of the CMO, the chief operating officer, and other functions in the business that have nothing to do with media. And to understand why this is so important, the pressure of the moment, we need to understand a little bit the history of these consumer packaged good companies. They have all been growing a lot over the last decades, right? The rise of mass media and mass brands, television and, let's say, Unilever, Mondelez, etc., is intertwined. Without mass media, no mass brands, and without mass brands, no funding for mass media. But things are changing, because these companies are not growing anymore as they were just a few years or decades ago. This slide looks complex, but it's fairly simple. The red is bad, the green is good, and then the rest is kind of in the middle. So on the top, we have revenue here in the different periods. In the recession here, the big Lehman crash, there was still revenue growth. The recovery to the recession was there, but then we had different eras, shareholder activism, and then something called a Goldilocks era, which economists say is the perfect sailing. Right? It's a nice little breeze, the economy is growing, unemployment is low, consumer savings rate is high, etc. But that was really the last time in this period that these companies could grow strongly organically. We had a pandemic boost, yes, but it was really triggered by people hoarding, by buying stuff, etc. And after this, we can see different periods, current expectations, slower growth. And this also is happening if we would extrapolate this further out. And then also profitability is going down. Meaning these companies cannot grow as much with the same logic as they did in the past. They thus need new strategies to do so. And combining advertising with the sales activity is a key way to do that, to measure the impact of marketing and to really drive the growth. And that really drives the power of retail media. Now, we talked about the demand side, right? But what's actually motivating the retailers to lean into this, to offer retail media products, to start retail media teams, to do on and off-site, etc.? I call this the hunt for profitability. Over here, it's very small, but you can see ranked over 100 different retail businesses worldwide. We're looking at their margins. Right? The higher the margin, the higher this is. This is the sales margins from their products. Luxury is up here, but then when you go down here in groceries, etc., the margin kind of dwindles to 3%, 2%, 1%, close to nothing in a sense. That's a typical margin that retail businesses operate in. But the dotted lines here are the margins for retail media advertising businesses. So the margin for on-site products, i.e. selling advertising on the page or the app of the retailer, is often nearly 80%. We know the Amazon margin is kind of tracking close to 70%. And even if the retailer says, okay, we're going to use my data to target advertising campaigns programmatically on social, on search, off-site, the margin, 20 to 40% typically, yes, you have to pay suppliers and so forth, it's still orders of magnitude higher than the margins from selling goods and services. And the Walmart CEO recently said in the entire history of the company, he had never seen a business with with margins as high as advertising. Meaning, advertising isn't just a nice bolt-on, an add-on to these companies, but because it's so high margin driven, it can actually fund wider digitization activities. Think of some grocery companies, for instance, who during the pandemic were kind of forced to switch to digital models, online store, delivery, etc. That cost a lot of money. IT, people, processes. Digitization is expensive. And often these were loss-making enterprises. But when you use the advertising money, actually it becomes profitable. So advertising becomes a flywheel to drive and make profitable entire digitization efforts. That's a key thing why companies are leaning into retail media. And if we go back a little bit in time, there was a seminal meeting at Amazon in 2017. Amazon has 2 leadership meetings per year. And in one of those meetings, Jeff Bezos asked a seemingly innocent question. I wonder what unit profitability was without advertising. But none of the executives in the room had an answer, because they had never thought about separating the product revenue from the advertising revenue. It was all merged together in one single P&L. And they were scrambling and calculating and said, I'm going to get back to you. And suddenly they had the data, and there was no profitability, not at all. And indeed, if we look at the time progression, this was some kind of here, right? We can see the operating income without advertising is blue, and with advertising is in gray. You can see the gap is widening, meaning, again, separating advertising and the overall product demonstrates that advertising is the key profit driver. So digital retail businesses often only make sense if you layer advertising into the whole product. But with this demand from advertisers, with CMOs saying we are digital and commerce offices, with the potential of unlocking first-party data due to signal loss, with new companies getting major funding on the stock exchange like Maple/Instacart, how ready are retailers, in particular in Europe, really, to unlock this opportunity? When you look at the press, nearly every retailer talks about launching retail media offerings. Industry press is full of ambitious stories, case studies, and so forth. But how mature are really the offerings? Is everybody going to be a Walmart, an Amazon 2.0, or is it more difficult? Well, let's first do a definition. And Salvatore has worked with us on this, because retail media is not something that is easy to define. In some ways, it's not new at all, because analog retail media is as old as supermarkets. Think of the little cardboard logos and displays next to the supermarket aisle. That's not what we're talking about today. But we want to have a modular definition, like Lego bricks, that say, depending on what everybody defines, we can change it. I'm primarily speaking about what's happening on the websites and the apps of retailers and how they're using their data offsite in search, social, programmatic, and so forth to target other ad campaigns. We don't have data yet on digital in-store. It's still fairly small. The vast majority of growth and hype is here, and it's here. So I'm going to focus on that today. And retailers in Europe are well positioned, in a sense, to unlock the promise, like an Instacart and others, because we have a lot of businesses with high online gross merchandise value in Europe, i.e. the volume of transactions going through their online shops and platforms, etc. The largest two are surprisingly German. Zalando, Otto, then we have Casino Group, Tesco, CE Economy is kind of MediaMarkt, Saturn, and then Bol, Netherlands, Marketplace, Ahold Delhaize, also Dutch. If you combine those, that would be the third largest player. But this is always in billions here, so there's a lot of potential. These are large players. Whereas in the US, it's much more concentrated. How can we actually calculate what the potential is? There is a relationship between gross merchandise volume, i.e. the transaction volume on the platform, and retail media advertising revenue. Many, think of Zalando and others, in their official reports say that they measure the maturity of their business as retail media revenue as share of online gross merchandise value. And we can do some calculations to see how that currently looks like. So we did this for 80 companies in Europe and in the US. We went through their filings, did some modelings, because we're a trade body, we're not naming and shaming or endorsing anybody, so I had to sadly kind of remove the names here, but I just want to show you the macro trends. Right? We can see this is advertising retail media as a share of gross merchandise value over here. Clearly, US, Europe, US is ahead, far. Right? The top third of this chart here is predominantly US companies. You see some outliers scattered into Europe. I'm going to show you why that is the case in a second. The most important thing, or two lessons here. We are behind the US in this, behind the Walmarts and others, clearly. But the other lesson is here. Look at this one here, this little horizon here, this little purple line. This is the stated ambition of many retailers, where they want to take their retail media advertising business to in the next 4 years. That's the landing zone, i.e. the desired retail media share of online GMV. Again, this is a rule of thumb. Right? Not for every business it makes sense to add that much. For some it's going to be more. But the important thing is, this is the stated goal, and if you look at the data here, we are far from this goal, right? We're 50% there in some cases maybe even only 10%. So is it realistic that the European market can catch up to this? This is something that I want to unravel with you in a little bit. But first, let's look at these outliers a little bit more. So this is the same data as on the previous chart, but now I've separated not just US and Europe, but I've categorized things into last mile delivery apps, marketplaces, and retailers. And wow, the picture is quite different. Yes, the US is ahead overall, but if you look at last mile delivery and marketplaces, Europe isn't that far behind at all. In particular on marketplaces, it's actually on the same level. It's the retailers, right? So traditional retail businesses, grocery, DIY, consumer electronics, etc., where it's behind. There's a fundamental lesson in that, because it's much easier to scale ad businesses on last mile delivery apps and marketplaces, because advertising here is a tax. It's a digital rent. If you have a kebab shop and you want on your last mile delivery app, you want this to be delivered to consumers. There are thousands of other shops. You have to advertise to be on the top page or the top 2 pages, right? It's impossible to sell without advertising. So this is the tax. So demand is there, and it fits quite naturally in the overall design and economics of the platforms. Whereas for retailers, it's quite different, right? It's not a tax. There are other advertisers in there, larger brands, not the small brands. The retailers are commerce people, not advertising people. It's hard to think like a publisher. Do you have ad ops teams? Do you have measurement people? Do you have people who can traffic their campaigns? No, you have to learn that. And also, when you hire advertising people, then you have to educate your C-level why advertising is important. It's a different culture and so forth. So these are all reasons why retailers are still behind. Plus the landscape is more fragmented in Europe as well. Now, these are the averages what we can see. 2.1% of online GMV in the US, and we are kind of behind here in Europe. But what about the future? So the good news is the gap can be closed. Here we can see online GMV growth in Europe, past years and forecast, and the retail media growth. What strikes is online GMV growth collapsed in 2022. This was the post-pandemic hangover. We ordered so much online during the pandemic, the economy moved towards the brick-and-mortar world again, so there was a blip. But yes, the e-commerce model persists and grows continuously. We can see this on the black chart. But retail media growth is faster than that, 1.5x to 4x faster, depending on the year. So the gap naturally closes. So little thought exercise. We have our little horizon again, the landing zone. And here we have in Europe the share. This is now weighted. The other one wasn't weighted. This is weighted by the volume, kind of by the company revenue. We're now kind of at 1.7% of online GMV. Who thinks we're going to hit this elusive landing zone in 2025? Little show of hands. No one. We're pessimistic. 21, 26? Anyone? Yes? 27? Never. Okay, we're not that pessimistic. Good. So, indeed, well, it's not starting well, because right here we have Amazon is growing a little bit slower. We see some of the rollouts of retailers are a little bit slower now, in particular in Germany, with strong economic headwinds. So 2023 isn't looking too good. 24, uptick again. And yes, 2025, we're hitting the zone at around 3%. In 2026, also, and then we expect, depending how we slice and dice it, 3.6%, bang in the landing zone by 2027. So you're right, between 25 and 26, it seems to be realistic, although we seem to be so far behind, just because retail media grows so much faster than online GMV, that we can actually hit this zone. What's the market size? What's the outlook in Europe? How does this data translate into the actual volume of the market? So first, where do the budgets come from? Who fuels this, right? Digital advertising is large, but it's so mature. Where does the money come from? The good news is a lot of money actually is net new money that hasn't been advertising money beforehand whatsoever. It comes from trade budgets, which usually were actually discounts and rebates based on the volume of yogurts and other things that you buy. So it wasn't ad spend. This is now being reclassified as advertising money. The teams are collaborating together, trade and digital teams. That's the biggest pot of money. Digital advertising is growing overall. We see shift from traditional radio, television in particular, and then also from other digital channels, search and social. Some budgets are moving into retail media, and some shift in sponsorships as well. Spoiler alert, the shift from other digital channels, I think, is a net positive, because a lot of that money is being reinvested through offsite media again in programmatic, in social and search. So it's not actually leaving these channels, but it's funneled through retail media, augmented with retail media data, and then going back in those channels. Size of the market. We've revised our forecast. Last year we came out with a forecast saying 25 billion, including Amazon, by 2026. Due to this slightly slower growth, we think it's going to take 1 year longer, but still, this is a sizable market. This is a really big market. The problem is it's not really a useful figure, because Amazon is so large. To understand the potential of the Spanish market and the domestic market, we need to deduct something from this figure. So let's remove Amazon and see, right, this is now the European market excluding Amazon. Far smaller, but still a multi-billion euro market. We can see Europe lags other regions here, the US and also China with the super apps, Alibaba, etc. But it shows if we compare to the US here, there is again organic potential for growth to kind of hit the same retail media share of online ad revenue. Comparisons, including Amazon, we are, here Germany example, as big as TV, that hasn't changed. Excluding Amazon, I think radio is a better comparison, where the retail media market is going to hit the size of the radio market in a few years' time. Overall, we can see that excluding Amazon, the market is growing faster than total digital advertising, and we expect that retail media is going to hit nearly 6% of overall digital advertising, excluding Amazon. So that's sizable. That's a massive contribution to this large market. We look at the different countries. This is data that we're showing for the first time. We can see this is what we think the market size is currently excluding Amazon. So this is including last mile delivery, marketplaces, and so forth. UK, Germany are ahead, France as well, Netherlands in particular through bol.com, Poland due to the domestic platform marketplace Allegro. But we see a lot of potential, in particular if you look at the Spanish market and the Italian market, a stronger compound annual growth rate, i.e. average growth over the next couple of years, far stronger than in other markets. So I think there's a lot of potential, in particular here in Spain, to catch up. Briefly, before I conclude, a little view under the hood, because we need to also not just celebrate the growth, but also see the problems in this market. The first is, this is an example from Germany. Revenues are unevenly distributed. Right? We don't say the number of companies here, but the different types of players. The largest player makes nearly 200 million in retail media, but then there's a lot of long-tail businesses in there that are still at the very beginning of their journey. So power is very unevenly distributed. Secondly, we're seeing very different strategies in terms of how companies are doing retail media, in terms of ad load, for instance. This is sponsored product ads in the US, and we can see in some cases it's just very, very ad-driven, like here on Amazon, keyword tags, and others the ad load is lower. So many businesses are still figuring out what's the best ad load, how many ads can I really use without affecting consumer experience. The third thing is, retail media is pretty expensive. So here are the typical CPM ranges for on-site display retail media versus other formats. It's very expensive. It often, of course, makes sense, first-party data, measurement, etc. But many retailers are not passing on that data to their clients. So increasingly, as budgets increase, the clients want more data, more evidence to justify these CPMs. And this is something that we have to work on to unlock the measurement. We also have an explosion of offerings available, right? Nearly 90 retail media offerings in Europe by 2022. How shall you, as an advertiser, as a Unilever, how shall you orchestrate across this if all of these businesses don't align in terms of measurement, standards, ad formats, etc.? It becomes very difficult. There are, I think, 3 scaling models how, in this fragmentation, retailers, this is only retailers, how they can bring alliances about collaborate. One is what kind of Carrefour is doing, in a sense, we call it an alliance, having different other retailers under the hood. The second is a white label commerce business, where a sense like Cnova, it's the marketplace business of Cdiscount. They have their online shop, which you can white label, and now advertising monetization is baked into that automatically as well. So with the shop, you get ad monetization. And the third one, not happening yet, would be a hybrid of the two, in a sense, providing technology, but also hands-on keyboard, managed service to help other retailers grow faster. And this is something that I think only very few retailers could do. What's next? I think collaborations will intensify, clearly. We can also see that data expands beyond the retailer channel itself into other media, right? We can see interactive and shoppable videos will come about, similar to China. I think TikTok and other formats will become more important. And also, I think clean rooms to connect things together will become more important to tackle this fragmentation. So I hope that gave you an overview of the status of the market and some of the trends. And I think we need to be optimistic about this market, but also realistic. There's work to do as industry associations, as market participants, to align measurement and standards to ensure that we can hit this elusive 4-year landing zone. Thank you.
Thank you. Thank you very much. Stay with us for a couple of minutes just to check if someone has a question for you. ¿Quién tiene la primera pregunta para Daniel, por favor? Sí. Y vamos a esperar a que te acerquen un micrófono, si eres tan amable. Y adelante.
Hi, Daniel, and thank you very much for the presentation. Very insightful, as always. A very quick question is about your opinion on how the changing and more restrictive GDPR regulations are going to impact all of this. As we know, the data is very important, but also the consent to use that data, and that is becoming more and more difficult in the recent years, especially in Spain.
Absolutely. I think that is a key question. You know, on the one hand, we know we're now in a signal-poor environment where first-party data assets are very valuable. And the retailers are surrounded by tech vendors asking to share data, for instance. For them, it's often difficult to withstand kind of the promise because they want to grow revenue. And I feel many are not fully understanding GDPR rules, etc., because they're just new in this world of advertising and becoming like a publisher. It's still unclear whether all the clean room solutions we see today, all the ID vendors that we have today, will withstand tests and scrutiny of the European regulator. So being, kind of, in a sense, protective about the data is important. On the other hand, being overprotective also really hampers the scale, because let's be honest, even if you have 40 million consumer profiles, you are not the next Amazon, right? So it is essential to collaborate, and we have to find ways of doing that. So I think some of the clean room solutions I think are interesting. Also alliances between retailers, one sales house, for instance, to bring things together, to move data into a first-party context is very interesting. Also, what you can do is, instead of, particularly when you want to do offsite, which is a huge growth opportunity, to not share your first-party data in the programmatic bid stream, which would be hugely problematic from a privacy perspective, but also you would put SKU-level data in there, which you don't want to do. But what you can do, of course, you work with some tech vendors and you convert this individual data into cohorts, into contextual targeting segments, etc. So move that individual data to group-based data. That becomes much safer to share. So I think those are some of the ways how you can collaborate and be open without running into large privacy risks.
Thank you. Yes, there is another question over there. Gracias.
Hi, Daniel. Thanks again, for such an inspirational, speech. It was really, really great. I am Luis from the Jump Live Commerce, and my question will be about live shopping as a new retail media opportunity for publishers. We see in France that most of the publishers, just like Fnac, Carrefour, etc., they are using live shopping as a new retail media opportunity for generating business. How do you think this live shopping as retail media opportunity will be across Europe in the next 2-3 years?
I think the discussions about this really started during the pandemic, even detached from retail media, where we saw massive rise both in video consumption and, of course, in e-commerce. And the logical question was, can we put the two together and, in a sense, do the same as in China, where this is the standard way of buying? And many platforms try to superimpose the Chinese model onto Europe and even in the US. And it didn't stick. So that wasn't really the adoption, because it's culturally quite different. And so it will be a longer journey. I think it's going to be an important component in the mix, but consumer habits here change slowly. Is it safe to do a transaction from a video, for instance? Can I trust the payment provider? Where am I exactly buying? Who is the merchant? These things all need to be clear and figured out to drive consumer adoption. But overall, the rise of vertical video, in particular, I think if you look at the beauty segment or others, I think is where opinions about products are being shaped anyways, is going to be attractive for retailers, and it could be also one way how retailers and publishers or retailers and platforms collaborate. So crucial ingredient, but I think we should not believe that we're going to get to Chinese levels anytime soon, so it's going to remain an add-on for a while.
Thank you, Daniel. Very insightful presentation. Thank you very much for
Thank you.
being here. Give him a round of applause. Thank you. Thank you.